MIT Network. Please subscribe, like and share.
Thank you for come to MIT Network. Please subscribe this MIT Network channel. Beside like, share. Ralph Nelson Elliott developed this theory in the 1930s. Elliott argued that upward and downward market price action was based on mass psychology and always showed up in the same repetitive pattern. These patterns were divided into what Elliott called waves. According to Elliott, crowd psychology moves from optimism to pessimism and back again, and this is seen in the price movement of market trend, which is in waves. The Elliott wave theory assumes that a market moves up in 5 waves and down in a series of 3 waves. Elliott concludes that markets' moves are not random but follow repetitive cycles by mass psychology. The repetitive cycles show up in waves. A wave is a movement in the market either upwards or downwards. Elliott discovered 2 basic types of wave patterns: impulse waves of 5 waves and 3 small corrective waves. Impulse waves move. The corrective wave moves in the opposite direction. Elliott labeled 5 impulse wave patterns to describe different stages of mass psychology. The waves are subdivided into 5 small waves, 5. Generally, waves are 3 and 5 are the trend and 2 and 4 are corrections within the trend, figure 2. Wave 1, its trend and sentiment is overwhelmingly negative, but some buyers emerge as the market starts up. This wave is marked by limited public participation. Wave 2 corrects Wave 1 and does not extend beyond the starting point of Wave 1. The news is negative but shows signs of improvement, and some early buyers look to take profits, not convinced of the viability of the trend. In Wave 2, public participation has increased. Wave is the most powerful wave. There is more positive news. The public looks to get on board. Wave 4 is corrective and offers a pullback. Early buyers look to take profits and some who miss the early move. Wave is the last stage of the dominant trend. Mass psychology is a universal positive reaching euphoric stage and the market becomes over. The public are the buyers of the market. The market is ripe for a trend change. Elliott also concluded that markets move in a 3-wave corrective pattern. The corrective wave pattern is commonly referred to as the ABC correction, 5. The A wave is hard to recognize. In Wave B, prices reverse higher. In Wave C, prices move lower. Generally, Wave A and C are trend corrections and Wave B a counter-trend move within the correction. These waves are known as harmonic, figure 2. The fractal character of Elliott wave patterns. Download full-size image. Figure 2. The fractal character of Elliott wave patterns. Adapted from Ref. 6. One of the basic tenets of Elliott wave theory is that the structure is fractal in its character. Elliott wave patterns that show up on long-term charts are identical, and will also show up on short-term charts, albeit with sometimes more complex structures. This property of fractals is called self-similarity or self-affinity, and it is what this writer is referring to when he says that the market is fractal in character. Elliott waves are fractals because fractal is a geometric object that is followed by its division in small parts of shape. Each impulse phase consists of 3 subwaves upward of 5 breaks, and each correction phase consists of 2 subwaves downward of 3 breaks. The Elliott wave, we can find more and more fractures in each subwave. Just such repeating pattern is a fundamental property of fractals, see figure 2, 5. Using Elliott's waves for determining the future. If Elliott wave occurs in a stock market trends, we can expect a break in price of the 5th pulse wave or after the 3rd correction wave. Of course, it is not so simple. The Elliott wave is very often distorted differently, and prediction is then very difficult and sometimes impossible. Our use of the word fractal, or Elliott wave fractal, is not a proper use of the property of self-similarity. When we use the term here, we mean a counting fractal, which is really a description of a relative position of a bar on a high-low bar chart. Thank you for come to MIT Network. Please subscribe this MIT Network channel. Beside like, share.
MIT Network. Please subscribe, like and share.